is watching financial news productive or not? And on the client side, I've had situations where I've had potential clients that have reached out and said, my advisor, doesn't know XYZ person who's come on CNBC, and it's kind of discredited the advisor.
Mm-hmm.
So we wanted to dig a little bit into the idea of, like, should your advisor be consuming financial news? What is the good and bad about that? And besides that, like, what should you be looking for in your advisor to distinguish, aside from whether or not they watch financial news, if they're doing the right things for you, and how to be thinking about building a plan and being invested and handling retirement. There's a study that shows that from 2001 to 2021, that the S&P 500 returned 10.65% annually. By the way, through some pretty brutal markets, right? I mean, 2001, you could argue the market was already down some, and then 2008. I mean, I don't need to tell anybody how bad of a market that was. And so, interestingly enough, if you look at the S&P over that 20 years, its average rate of return annually, 10.65%. You know what the average investor made?
I'm going to say 4.8.
Well, better than you thought. 7.13.
Okay. Yeah.
So I think people listening to that might hear, oh, well, that's only 3% different. Like, the average investor is not bad. Do you know what that 3% adds up to be over that 20 years?
Oh, it's significant.
So if you took $1 million and grew it for 20 years at 7.13%, I'm going to round these numbers just for ease of math. You end up with about $4 million, right? If you grow it at 10.65, you end up with closer to $8 million. What looks like a 30% reduction in return over 20 years actually cuts your money in half. Yeah.
That's crazy.
Right? Do you know why the average investor underperforms the S&P? Behaviors. Behavior. This has been coined in our industry by Carl Richards as the behavior gap. The gap between the investment return, the return of the investment itself, and the return of the investor, right? And there is a lot of data out there that says that the investor return is generally lower than the investment return. And why is that? It's because we make decisions based on emotions that are driven by performance. And so it tends to be that when it's a good time to buy, we feel sell. When it's a good time to sell, we feel buy.
Yeah. And I think that's a great way to launch into the podcast, man. So welcome to the Money Alchemist podcast. I'm one of your hosts, Ben Jones.
And I'm Brent Gargano.
And today we're talking about, we're actually going to cover an interesting topic, the value of financial news media. So, the question is, should your financial advisor be watching CNBC? And I have this opinion, back to what you said, of poor investment behavior, the behavior gap that you referenced. What is influencing that? I personally think that what influences that more than anything is the CNBC ticker. You turn on the channel and all you see is just like things moving. You just tons of variables. You've got hyperbole. You have these animated hosts talking about all the different dangers and things you should be aware of. When stocks are down, it just seems to me that they exaggerate the redness of everything. It's like that, that meme that with Kramer and Seinfeld where he has the red room. You ever seen that meme? And he opens the door and Jerry's like, "What's going on in there?" And then it just has like the quilt chart, the daily performance quilt chart. Anyway, that's how I feel like. That's what I feel like when I'm watching CNBC. And I think that it leads to poor investment behavior. So, you and I kind of have different opinion on this.
No, I actually think we have a very similar opinion, believe it or not. But what I will say is that I would be willing to bet that if we made a graph And on one axis, it was the amount of time consuming financial news. And on the other axis, it was rate of return.
Mm-hmm.
Clients that consume more financial news probably make a worse return on average. I would, I think in some respect, it seems silly, and we talk about it a lot when it comes to investing, but the more aware you are, the more potential you have to make a change, to be driven by emotion and to influence that behavior gap. And so I think I speak for both of us when I say that we've seen clients that and families that have kind of been negligent in some ways to the amount of disconnect that they have from news and from financial media, but their portfolios, as long as they just left them alone, are actually some of the best. I do agree that being more connected to news,
Mm-hmm.
and I won't even just say financial news. I think when the market's really swinging around, even the non-financial outlets like to report on what the market's doing.
Mm-hmm.
But I do think it has a negative effect on your finances. Now, from the advisor's perspective, it's tricky, right? Because our job, like a big part of our job, there's two things that advisors do primarily that drive your wealth: manage your behaviors and help you manage taxes, right? If we can drive your tax bill down and we can help you become a better investor by managing your behaviors, we can help you create a lot of wealth over time, right? But managing your behaviors, what a client or a potential client might hear there is help you buy low, sell, a lot of times managing your behaviors is helping you stay invested. That behavior, like, we don't have to do anything really creative to compound your money that's in the market at 10% over time.
Mm-hmm.
Like that's been the historically relevant return through all sorts of volatility. Now, what you do have to be able to do is have the staying power to see it come back. And so that's where allocation comes in. But as an advisor, it is tricky because on one hand, can you imagine a client calling me and saying, "Do you know what's going on with the market today?" And me saying, "No, I have no clue." Right. So I know, and advisors are opinionated about this. There are advisors that, like, on purpose, just put their head in the sand and do not watch any of this stuff because they see it as useless. I'm a little different. So I wake up every morning. I watch Squawk Box on CNBC. I think Andrew Ross Sorkin is really good, asks really good questions. I like Joe Kernan on there. I like Becky Quick. They have interviews with some of the top CEOs from around the country. When CEOs want to announce something, they come on Squawk Box. I think there's a guy named Mike Santoli on there that I really like. And I think they have some good guests, everything from, like I said, CEOs to Fed officials and so on. And I like to build that knowledge because I think it's important when a client calls you, even if your answer is going to be, let's not do anything.
Mm-hmm.
I think there's a lot of value to the trust that the client places in you, to knowing what's going on. I think if I was a client and I'm trusting my advisor to handle my money, even if that just means we're going to leave it alone and make, maybe do some minor changes, I would want to know that that person is plugged into what's going on in markets, right? I don't think it would help me feel more comforted if I called my advisor and said, "What's going on today in the markets?" And the advisor said, "I don't know."
Maybe I'm being too logical here because my response would be, because I do not pay attention to CNBC 24/7. I'm aware of Squawk Box. I'm not aware of all the names that you just mentioned. I know of them. But I don't know their thought process. I don't know their analysis. I personally like following the names that people have never heard of, fund managers mostly. So I read their commentary. There's a few, niche analysts I follow on X that I like. But I generally don't look at the day-to-day announcements, the daily market movements. I'm usually aware of what the market's doing day in and day out in terms of like volatility. Sometimes you need to know that information based on, it is relevant to when you're trying to time trades. For example, if you're trying to raise cash in a client account, that's needed in like 30 days, you're not going to do it on a day where it's down 3%. You're going to try to the best you can choose an upswing day if you can. Sometimes you can't help it. So it is necessary to know what the market is doing day to day, but not because you're logging into client accounts and then trying to time trades. That is, I think, counterproductive. I think you agree with that. Your rationale for paying attention to CNBC, I think part of you, you love to know. You love to know what's going on.
Primarily I enjoy it, but I guess my argument, if I was making an argument, is that part of the ways that I can help investors close that behavior gap is by establishing trust that I am there to help lead the way. And, I think that trust goes a really long way during market volatility to keep people from making rash changes. I think if they don't trust you and they don't feel you really have an idea of what's going on, they will start to put their decision making ahead of yours, and it will cost them over time.
When it comes to making client portfolio decisions, I just don't see it. I don't trade in client accounts. I don't recommend that they trade. How is watching CNBC going to help me be a better long-term investor? Let me rephrase that. In an environment where, in a vacuum where that's the only news information I have, yes, I would see the value. But I get access to a lot of other, high quality information. Now, from the consumer standpoint, this is very dry, kind of like, brain acidic type of like white papers and economic data. There's a guy, there's a lot of Substacks I subscribe to that are just drenched with great information, but it's not necessarily entertaining. It's not easily accessible. So I prefer to consume that. But the cost of doing that means I can't just, on the fly, like if a client called me and said, "Oh, did you see Rick Santelli talk about, fixed income markets? And what do you think of what he said?"
You ever actually had a client ask you that?
I actually yes, not that exact question, but I've had clients that had just watched CNBC or some other news station, and they call me right away and say, "What do you think about this?" And I'm like, I don't know. I'm kind of caught flat-footed, and to your point, that discredits me. And what your opinion is, if you're aware of that, and I do agree with this, if you're aware of what's going on and you're in tune and you can effectively respond to that, that builds client trust. And I do see that, and part of me is jealous because I don't prioritize watching these news stations. Maybe I should. Your point is that they need to be informed.
They need to be informed. They need to be aware. They need to be plugged in, right? If your advisor isn't involved in, like you and I both, Ben, we're involved in the Financial Planning Association. I think this is a good plug to talk about. The Financial Planning Association is a national organization with local chapters that are designed to increase and push financial education for advisors. So you and I are both on the board of our local Financial Planning Association, and we work to put together events throughout the year that have high quality speakers. Like these are not, these are not like paid, hey, we've got somebody that wants to push a product, so we're going to let them do a speak. These are, a lot of times we are paying these speakers to come in and talk to our people and talk about things like charitable giving strategies with illiquid assets, how to help clients by thinking about their asset location, what kind of investments go where and how that impacts their taxes, how to help clients minimize, RMDs through Roth conversions, right? Like these are all the kinds of things that your advisor should be plugged into and bringing up.
Yeah.
If the best thing they can do in a once a year meeting is bring you in a product to sell you, and they don't talk about your, investments, tax, estate, things like that, then I don't know how you're building a whole financial plan in that
Well,
one
it's
meeting.
a sign that your advisor's more plugged into the wholesaler pitch than they are FPA style meetings that are just jam-packed with high quality information that materially impacts the lives of every person with capital. So I think that. Now, here's a question for you. Let me rephrase. I'm going to shift my mind here real quick. Do you think that it is valuable for clients to be in tune with financial markets? So we've addressed the question, should your advisor be in tune with financial markets? The answer is yes. They need to be informed in order to address your concerns and help you adhere to appropriate investment behavior. But do you think it's valuable for individual investors to be in tune with markets?
No, I really, I mean, I'm not going to say that like people picked on Fox News for taking the Dow Jones ticker off the news, right? When the markets were getting volatile. Frankly, my opinion is the ticker should always be off the news. I mean, clients need to be able to have a way to get away from some of the hardest thing in 2025 to manage market volatility is your phone gets push messages from everything.
Yes.
And telling a client not to check their portfolio doesn't get them away from the message that hits their phone at 6 p.m. at night that says Dow dropped 1,500 points today, worst day in, X number of years or whatever it is, right? So I think that it's pretty strongly supported that like you shouldn't put yourself in a position to become emotionally compromised, and the news is trying to prey on those emotions. So I don't think it's good to plug too heavily in, or at least put too much merit on it. On the other hand, how do you get away from it? And I mean, if you don't want those push messages on your phone, you have to be so intentional about going into your settings and adjusting your notification settings on every app that might push you something that talks about the stock market. And that might be, I mean, I have the CNBC app, but the Wall Street Journal app pushes me these things half the time. Bloomberg. It's CNN. I mean, news sites that don't talk about markets talk about markets when they get scary. So, I don't think that you should avoid. You want an awareness. Please, reach out to your advisor if you have questions. I think there are really good, sometimes an advisor is looking for a good opportunity to really engage and get deeper in a conversation with you than maybe they've been able to get in the past. So if you're feeling uncomfortable, call your advisor and have a really thoughtful conversation about where am I? Where is my plan? What are we doing? Right. But don't freak out based on make sure you have an advisor you trust. Make sure your advisor is a consultant and not a salesperson, like we were saying before, and build a financial plan that you can stick to. And other than that, try to tune it out.
Yeah. And I wouldn't be too concerned if your advisor does not know why the markets are moving day in and day out. I think they need to be informed regarding a market forecast. They need to have an understanding of historical market events and fundamentally how markets operate, both fixed income markets, commodities markets, and equity, all financial markets relevant to your financial plan. But I wouldn't necessarily get too concerned if your advisor doesn't know why the Dow dropped 1,500 points.
You may find yourself trying to figure out how to gauge, am I working with a good advisor? And the way that you could measure that, I'm not saying that it's bad to watch CNBC, because again, I watch CNBC. Ben, you don't, but that is less important as whether or not your advisor is actually doing the things that a planner should be doing to fundamentally help you, right? So thinking about how are you allocated relative to your risk tolerance, building a financial plan for that, addressing things like your taxes and proactively planning for taxes, building an estate plan that's specific to you and what you have. Even if it's a simple estate plan, you can, each person is going to have a slightly different approach to how they think about it. If your advisor is having one meeting a year with you and they're not touching on some of those points, and instead you're getting pitched an annuity, I don't care whether they watch CNBC or not. They're a bad advisor.
Or they're just making some sort of like emotional appeal to get you to behave in a way that is advantageous to them.
So your advisor should be bringing up all of these things on a once-a-year meeting, hopefully having more meetings than just once a year. I generally meet with my clients maybe quarterly. And so everybody has a little bit of a different preference, but I think we can all agree that if you're going to build a solid financial plan, meeting once a year doesn't give you really the time and the breathing room to flesh out how the client really feels, what they need to be doing, and how to move forward on it.
Yeah. Well, I don't know if I have anything else to add to that. That's a great way to sum it all up. So, if your advisor watches CNBC or doesn't watch CNBC, hopefully they're at least helping you build wealth through, proper asset allocation, good tax planning, estate planning. They're covering the whole 9 yards, whether it's done in very difficult. I agree with you. It's very difficult to do that one meeting a year. Hopefully they're doing over the course of the year. We generally don't. We have like one formal broad, we call it the client priority review, where we're doing a broad-based review. But then usually what happens is those things are addressed through not necessarily in-person communications, but sometimes it is, but just communication throughout the year. Hopefully your advisor is communicating with you on these topics and not necessarily just focusing in on the volatility topic, which is what we get bombarded with from, all those phone alerts and the news media. So don't have anything else to add unless you do.
Thanks, Ben. We really appreciate the time.
Opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Investing involves risks, including the potential loss of principal. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Advisory services offered through National Wealth Management Group, LLC.